Good morning, good afternoon, everyone. Today is the first day of October. Welcome to October. Welcome to Q4. After all of the window dressing yesterday, the market continues to go higher, so still bullish and might never go down again. We're now in the fourth quarter, which usually is the best quarter of the year. So we'll see how it goes. Let's take a look. Got a couple of good questions that came in last night that I want to answer. But let's real quick take a look and see what the market's doing right now. If we go to the 10-minute charts, I'll go through these pretty quickly. You can see gap down, opened first 30 minutes of the day, which is usually the most volatile. And most traders call that amateur hour. That's when retail traders think that whatever stock they're looking at starts to go up and it will never go down. So they need to jump in. And a lot of times it goes down right after that, right after 10:30. So I recommend not doing anything until after 10:30 at least. In this case, right around 10 o'clock is when it started going up. So now we're above the open. Positive for the day. Money flow looks pretty good. Technology is up. Discretionary is flat. Communications is down. So that's Netflix and Google. We'll look at that in a minute. The defensive sectors are pretty much flat or down. So it looks like it's a bullish day today so far. Cyclicals, financials are down. Healthcare is the big winner for today. Industrials are flat, materials down. And rotation, growth versus value, not much happening there. Discretionary looks pretty good. Technology, semiconductors are both doing really well today. So they're the ones carrying the market. There's the breadth. The breadth is starting to improve a little bit. So percentage of stocks above the 20 is now above its moving average line. Same with the 50. So that actually is very positive. If this continues to improve, that's going to be good for Q4. Russell 2000 small and mid caps pretty much flat. Also went down this morning, but doesn't look as good as the S&P. And you can tell that down here. So this is the relative chart of the Russell to the S&P. Basically, if this goes down, that means the S&P is outperforming. So your money is better off in the S&P rather than in the Russell. And that's true of both mid caps and small caps right now. There's a breadth for a small cap. Mid caps doesn't look that great, not as good as the S&P, and small caps slightly better, but not too great for small caps either. NASDAQ 100, same thing, sell off in the morning until 10 o'clock and then started climbing back up. And advancers minus decliners looks really good, heading higher, and the volume is heading higher. The VIX started off high along with the sell-off right there, but now it's starting to decline and go back down again. So the VIX is at 16 and a quarter, so it's below 17 right now. And the breadth for the NASDAQ actually looks pretty good too. So it's starting to move back up. So all of this looks bullish. The market in general still looks really good, very bullish today. If we go to the market bias matrix, just out of curiosity, I want to see where the flip line is. Right now, it's still below the price. So continuing to move up, not quite at a new high, but looks like it might just make it there today. You can see down here, the VIX is not declining, but it's not increasing either, just kind of going flat below 17. So all that's bullish. NASDAQ 100, same kind of thing. Starts off a gap down, but then it's moving back up. Gamma flip line's way down here. So that means market makers will buy the dips like they did when it got down right almost to the 21, and they will sell the rallies. We don't know where this rally might stop, but they'll probably sell it. It'll move back down to the 21 again. Russell 2000 flip line is still above the price. So this is really interesting. So I want to see what happens, what this does now with that flip line up there. If that really starts to sell off, it could accelerate, but we'll see. This is going to be a test since this is kind of new. So I want to see how these different indexes react to that flip line. So in the future, we'll get a better sense of what they're doing. Here's Bitcoin. Big, huge move on Bitcoin. Broke out of the downtrend. It now is extremely bullish. So Bitcoin is off to the races, heading much higher, probably heading back up here to the highs again. It's now putting in, if it stays here, if it continues and closes up near this area right here, it will be a higher high. And that is the definition of a new uptrend. It's got a slightly higher low down here. So that's really positive for Bitcoin. Continues to move up. By the way, for our subscribers on the charts page, I put together this over here, this little Bitcoin versus gold chart right here. And the way this works is, first of all, at the bottom, it tells you the correlation between gold and Bitcoin. If it's in the red, that means it is uncorrelated. They're not moving together. If it's in the green, that means they are correlated. So right now, they had been uncorrelated, but back here, when this relative performance chart, when the lines cross over, right here is where you should sell gold and buy Bitcoin. So right here, Bitcoin just started to move higher right through here, and gold started just basically to go sideways. And right here, it flipped over. It says, get out of Bitcoin and get into gold. So into gold right there, gold moving up. Still doing really well today, pulling back a little bit, but it's still higher than yesterday's close. But Bitcoin is starting to move right now. So they're both moving. So this is starting to move back into the correlation zone, which means they will move together. And that's really interesting if both of these start to move together. That usually doesn't happen that much. So anyway, that's on the website. The other thing that I updated since we have started a new month is on the portfolios page for subscribers. I do a scan at the beginning of the year, right at the beginning of January, for dividend stocks. And I look at dividend aristocrats. This defines what they are. So these are stocks that have paid or increased dividends for every year for 25 years. And if they miss, they drop out of this group and it takes 25 years to get back in. And they have to be in the S&P. Dividend champions is the same idea, except they don't have to be in the S&P. And then down here is Vanguard has a high performance and high yield list. So first thing I do, I did this already, is I go through every stock in the Dividend Aristocrats list, and I create a chart list in stock charts of all of those stocks. I do the same thing for Dividend Champions. I go through every stock that's in the Champions list, and I create a chart list for those in stock charts. And I do the same thing for the Vanguard High Yield. Then at the beginning of the year, I run 3 different scans. So I create scans against that list. One is for high yielding dividends. One is for the past 12-month performance, since it's the end of the year. So it gives you for the previous year performance. And the last one is the technical ranking from stock charts, which is, it's a 12-month, it says 12 months, so it's really about 6-month technical ranking performance. And I've been tracking these for each of these groups. I just want to see which one outperforms. Right here is the results each month. I'm not going to click on that because then you'll see the list, which stocks are in there. And if you're a subscriber, you'll be able to see that. Just come there and click on that. But as you can see, the dividend yield one scan is the one that outperforms in each of these lists. So far this year, it's up 10.8%. For the aristocrats, for champions, it's up 15%, but outperforming the other two. And then these, when I ran this scan, I ended up with the exact same stocks. So that's why these numbers are the same. So even though the scan was different and it ran against a different group, it actually ended up returning the exact same stocks. So there's about 18 stocks in this one, 15 stocks in the other ones. So as you can see, almost 23% return on the Vanguard. Now up here, I created a chart just so you can visually see each of these. So the aristocrats right here, the yield scan is clearly outperforming. Champions, the yield scan is outperforming. High yield, they're all the same. So there's just one chart, but it's doing really well. All of these are doing really well this year. And then down here shows you the 3 groups side by side. And in this case, you can clearly see that Vanguard is definitely the outperformer of all of these. In fact, next year when I run this, I will only run the yield scan because that's the one that performs the best. So I'm not going to spend the extra time and effort doing the other two. I'll just run the yield scan, but I will do it in all three groups and I'll track it again. But it looks like the Vanguard group far and away is outperforming. So if you had been a subscriber for a while at the beginning of the year, and you saw that I did this last year as well, and also the Vanguard outperformed last year, and you just had bought all the stocks in that group, then you would have been up. Right now, you would be up. This is including dividends. If you just went with the Vanguard group, you'd be up 23% for the year. So pretty good performance. Anyway, because at the beginning of the month, I've updated all these. I do that the first of each month just to keep track of it. We'll see how it looks at the end of the year, and I'll run that again for next year. So if you're a subscriber and you want to get into long-term dividend type of investing, that's the way to do it. And of course, the market timing strategy over here is also a long-term way of tracking the market. So all of those are on the portfolio page. All right, let me very quickly take a look at the scan. And the scan I want to run is the IBD scan for bulls, the bullish scan. So CLS, these are some pretty good stocks in here. CLS looks like it's just beginning to try to break out. FTA, AI, aviation had earnings back here, gapped up on earnings, just ran higher, pulled back. This is exactly what you want from a strong stock. Pull back to the 21, and now today starting to move up. So that is a good entry point. MIRM Pharmaceuticals pulls back to the 21, again, right at earnings, big move up. So that might be a good entry point. You can see it's in a squeeze right now as well. Rocket Lab is on the list. It's still got some work to get above the previous highs up here, but it's starting to move up with momentum moving higher as well. And then Tempus AI, TEM, also good entry point. You can see earnings back here, same kind of thing, moved up, pulled back to the 21. Now it's just starting to move higher. So that with a green bar over here, and just started into a squeeze as well. So that squeeze may be firing right now to the upside. So that might be a good entry point for that one. So I wanted to point those out. All right, finally, there's a couple of questions that came in, a couple of really good questions. One, I'll look at these. Where do we go to find the number of shorts? Want to see it for Path and Rocket. All right, so my suggestion, of course, I have a short squeeze list, and those are shorts that have more than 20% of their float short. And that's on the website for subscribers. They can certainly just download that. So that's all the stocks that have more than 20% short. But if you have a specific stock and you want to see how much the short interest is, so Path and Rocket we'll look at. FinViz is a really great site, and they have a lot of good stuff, good screening, and they've got both technical and fundamental screening. There's a lot that they offer for free, and that I have not logged in. So this is the free site. So this is for SoundHound, which you'll notice down here in this group down here, because the short float is 32%. So 32% of the float is short. That one is on my short squeeze list because it's more than 20%. Short ratio tells you how long it would take for all of those shorts to cover. In this case, it's about 2 days. So if there was a short squeeze, the short ratio tells you it would take about 2 days for all of those shorts to cover. All right, but that's the key number, 32%. So let's look at this for Path, UiPath. Hit resistance right here and then just sold off. Earnings were way back here, so some kind of news came out, looks like. But down here, short interest is 12. It's only 13%, so it's not on my short squeeze list. It is not a short squeeze candidate because there's just not enough of the float that's short for it to be a really good short squeeze. If shorts started to cover, it would take them a little less than 4 days to cover their shorts, but there's not a lot of the float is short right now on this. There's probably some more shorting now as it starts to go down. So I'm not sure why it's going down like that, but that's where you can find it. Go to Investor.gov. Let's also look at Rocket, RKT. And here you can see the This is 48%. So this one I think should be on my short squeeze list. Let's take a look. So 48%, it says here 48% of the float is short. It would take 5 days for all the shorts to cover. Out of curiosity, I want to see if that's on my short squeeze list. And if it's not, I'd like to know why that's the case. All right, let's take a look. Shorts down here, somewhere down here. It is not on my list, so that's interesting. I'm going to have to take a look and see why Schwab is not showing that. I'm sorry, Rocket is R. Yep, not on the list. All right, don't know why it's not on my list, but that's a good one for me to check into. All right, the last question that came in was, any thoughts on SPMO? This is a really interesting one. SPMO is a momentum ETF. So on my website, under the portfolios, which is where we are right here, you can see down here, these are the leveraged ETFs. So leveraged S&P, this is 2 times the S&P, this is 3 times the S&P. It's got it for the Qs as well as for the Russell, and the inverse. So these will go up when the market goes down. Don't recommend doing these in a secular bull market, but it's interesting to watch them. And these over here is just a relative between the long and the short ETFs. So if I look at this for instance, for the Qs, TQQQ is the triple long and SQ is the triple short. And you can see they are mirror images of each other. And basically, whenever this chart here flips from red to green, right here, is when you can get into the triple leveraged ETF anywhere in through this period right here. But if you want to be sure, then wait for this to flip. And you can get into the triple ETF and just stay in it until that flips back again. Same thing for the SQQQ if it was going down like it did back here. So this is where it flipped over a little bit before that point right there. You could get into the inverse right there and ride it up and make money as the market was declining. So that's the way those work. But that's a little different than SPMO. So let's take a look at SPMO. This is basically an ETF that tracks the 100 S&P momentum stocks. So it's just tracking momentum stocks. And yes, it would be a good ETF if you wanted to just put your money in here for the long term. However, I would use all of the other technical indicators to track it to make sure that it's not starting to roll over. And right now it looks great. So just like everything else that I've talked about here, the 21, of course, is the key. So one above the 21 back here. So you could have got into that momentum, those momentum stocks for the S&P and ridden it up just like that. Looking at this on a weekly chart, same kind of thing. So it had the pullback right here in February along with the rest of the market. So you would get out when it gets to the 21, get back in right there just to make sure it's not going to have an extended downtrend. So this would have been basically a break even. Maybe you're getting in a little bit higher than you got out, but it's much safer because you're avoiding this if it had continued to go down and didn't stop. But getting out and back in is just fine. This is a weekly chart right here. So this is SPMO. Now, if you want to do this on the NASDAQ, there's one for the NASDAQ also, QQQQA. So these are momentum. These are the momentum names for the NASDAQ 100. And this is where most of those big cap Magnificent Seven stocks usually are. So they're all momentum names. It's more than that, but these are all the momentum names right here. And you can see that even though this is much more volatile So the SPMO is a smoother one to be in. The momentum stocks here are much more volatile. Yes, they can move up very quickly, but they also can move down very quickly. But if you want to check both of those out, and I can do a gallery view. This is something you can do in stock charts. SPMO and QQQA. You can look at these side by side. So here's the daily view. Clearly, this one, I don't know. This is the only one I found that is similar to this over here. This one's Invesco. This is ProShares. But there's lots of gaps in this one. So a lot of volatility there. Much safer to be in SPMO. That's what the daily chart looks like. And here's what the weekly chart looks like. So SPMO definitely is the better one. So that's the one I would stick with, I think, rather than the QQQA. All right, really good questions. Thanks for posting those. I hope that helped. I might actually put SPMO on the website so we can track that as well. That's an interesting find. I was not aware of that, but I did a little bit of research on it, and looks pretty interesting if you want to just track the S&P momentum stocks. All right, that's it for today. Thanks for watching. If we go back and take a look and see what the market's doing right now. Still pretty much going up. There's the Russell. Russell now is breaking out. And there's the S&P. S&P is continuing to break out as well, even though money flow is starting to pull back a little bit. So we'll see how long this lasts. See if it lasts into the beginning of the day. But this is the 1st of October, so all that rebalancing will probably continue. They might continue to move things into the momentum stocks that have been going higher. So keep an eye on that. So anyway, thanks for watching. Let me know if you have any questions, comments. Please if you like it, just please click on the like button. And let me know if you have any stocks you'd like me to look at. Be happy to do that. Talk to you later.